Silver didn't just have a strong year in 2025, it had a redefining one. Prices pushed into levels many investors thought were still years away, and with that move came a question that will dominate 2026. Is silver entering a long-term breakout, or was 2025 a bull trap setting up for future disappointment? To answer that, we can't start in 2026. We have to understand what actually changed in 2025, because those changes are what will decide silver's next move. This isn't hype, it's structure, incentives, and market behavior. 2025 changed how silver is viewed. For years, silver lived in the shadow of gold. Volatile, unpredictable, often disappointing. That changed in 2025. Silver didn't just rally, it broke long-standing resistance levels and stayed there. That matters more than the price itself. Markets remember where an asset failed and where it finally succeeded. Once silver proved it could trade at higher levels, the narrative shifted from "can it" to "what does this unlock?" But here's the key. Every real breakout attracts two things at once: long-term capital and short-term speculation. That tension is what makes 2026 so important. The supply problem did not get fixed. One of the least discussed but most important developments of 2025 is that silver's supply problem didn't go away. It got worse. Silver continued to run structural deficits, meaning more silver was used than produced, and unlike other commodities, silver supply is stubborn. Most silver is mined as a byproduct. New mines take years to come online. Recycling can't scale fast enough to meet demand. This matters going into 2026 because price becomes the only real balancing mechanism. If demand stays elevated, or even just stable, the downside for silver becomes structurally limited. That's not a guarantee of higher prices, but it does reduce the odds of a full collapse. Industrial demand became the foundation. Another major shift in 2025 is that silver's industrial demand stopped being a side story and became the backbone of the market. Solar energy, electrification, EVs, advanced electronics, and data infrastructure all pulled increasing amounts of silver into long-term use. This is important because industrial demand behaves differently than investment demand. Factories don't panic sell. Infrastructure projects don't care about short-term price dips. Long-term contracts don't vanish overnight. So even if investor enthusiasm cools in 2026, silver now has a demand floor it didn't have in previous cycles. Investor demand came back, and so did volatility. 2025 also marked the return of investor interest. ETF inflows increased. Speculative capital returned. Silver started trading like a market people care about again. That's bullish, but it comes with consequences. Investor-driven markets move faster, they overshoot, they correct harder. So 2026 is unlikely to be calm or linear. Policy expectations did the heavy lifting. One of the biggest tailwinds in 2025 wasn't what central banks did, it was what markets expected them to do. Lower rates, easier conditions, a weaker dollar. Going into 2026, this becomes a fork in the road. If rates fall and yields decline, silver benefits. If inflation resurges or policy tightens unexpectedly, silver could stumble. Geopolitics and currency added quiet support. Another 2025 development that shouldn't be ignored is ongoing global instability. Geopolitical tensions, trade fragmentation, and supply chain vulnerability all reinforce demand for tangible assets. At the same time, currency weakness supported commodities across the board. Silver joined a wider commodity repricing. Another element which signals higher silver prices in 2026 is the fact that silver didn't rise alone. Gold, copper, and other strategic metals also moved higher, signaling a broader repricing tied to inflation, debt, and infrastructure needs. So, the question still remains: breakout or bull trap? The breakout case. Silver holds higher levels if industrial demand remains strong, supply deficits persist, monetary policy turns supportive, and commodities stay structurally favored. The bull trap case. Silver fails if investor demand fades sharply, rates stay higher for longer, the dollar strengthens materially, and the speculation unwinds faster than fundamentals can absorb. The reality: a bull trap doesn't require bad fundamentals, it only requires price moving faster than structure. A breakout doesn't need perfection, it just needs support beneath it. 2026 is the year silver will prove what camp it's in. Happy hunting. If you found this breakdown useful and want more calm, clear analysis like this, make sure to like the video and subscribe to the channel.